What's going on, guys? Diskin Young here. Have another video for you today. It is on stocks versus real estate. Now, before I even go into this topic at all, I do want to say I'm not a financial planner. I am not a financial advisor or anything like that. So these are purely just my thoughts on the topic. Let's start with stocks. Number one would be how liquid stocks are. Liquidity means how you can go out in the open market and how quickly you can sell the asset. When it comes to liquidity, stocks are amazing. With the click of a button, you can sell your stock and get your money back. The downside to this is you do not have control over the price that you sell. But when it comes to liquidity, very, very good for stocks. Number two would be the upfront costs when it comes to stocks are very low. To get started in stocks, you do not need very much money, maybe a couple $100s or even less than that. I think this would be a great opportunity for somebody that has very little capital to work with, but has a high desire to succeed and to learn. They can pour their knowledge and their research into stocks and how to make money in stocks, and they can reap the benefits without starting with a ton of capital. Number three would be it is truly passive. You do not have to have your hands on if you do not want with stocks. You can go buy it and not look at it for 1 year, 10 years, whatever it might be. There's no way that this can be possible in real estate. Real estate can be very hands-on, so there's not any tenants to deal with, no late rent checks, no tenants complaining to you, no units going vacant, you have to find new tenants. There's none of that in stocks. It is truly passive. To have that in real estate, you would have to go buy and pay for a property manager, which can be 7 to 10%, something like that, to get anywhere near as passive as stocks would be. Now let's turn to real estate. As opposed to going on a Vanguard website or something like that and hitting buy stock, real estate takes a lot of time to find a deal. You can't just go onto a website and pick one out really quickly and it's there immediately. It takes a lot more time to get into real estate in the first place. Not only do you have to go out there and find the deal, then you have to go through the escrow process and the financing process. And you're looking at typically around 30 days until you even have control of the real estate. After that, it would be very unliquid. As opposed to stocks being very liquid asset, real estate is a very unliquid asset. You have to pay quite a bit of price to even sell the asset, typically around 4 to 9% in closing costs, plus wait that amount of time until you even get your money. So in terms of liquidity, real estate is very unliquid. And then there is a high startup cost. You cannot just get into real estate with a couple $100s for the most part. I know there's outliers out there, but for the most part, you can't just get into real estate for a couple $100s. It'll take a couple thousand, if not hundreds of thousands of dollars to get started into real estate. So it does require most of the time a good amount of capital to get started. So now you're probably thinking, okay, so stocks are a much better option, correct? Why would I even look at real estate? Well, here are some of my reasons why I absolutely love investing in real estate. Number one would be it is a physical asset, meaning it is a physical asset that you can go and touch with your own hands. It is not paper money or something way out there that you don't even know what it is fully. It is a physical asset that you can touch. Number two would be you fully manage it and have control over it. That means you can increase rents if you want. You can remodel to gain equity in the building. You can add square footage if zoning allows. You can do expandability factors is what I call these, meaning you expand to gather more income for the building. That would be like adding coin-op laundry, paid parking spaces, storage unit rentals, things like that you can increase the income and have a direct impact on the bottom line for the asset. Number three would be the tax advantages are huge. Now I know before you guys say anything, I do know that stocks have this as well. I'm not as familiar with them, but I think overall real estate has more tax advantages available to them. Like depreciating the building for 27 and a half years can be huge. Writing off your mortgage interest can be huge. Writing off all your expenses that you put into the building. You can also do something called a 1031 exchange, what I've talked about in previous videos. meaning you take your capital gains and you defer it to the next building without realizing the gain, meaning it's not in your physical bank account, but you're basically rolling that profit into the next building and you're deferring paying your capital gains on it. So there's humongous tax advantages involved when you're talking about real estate. Now, you're probably asking, which one would I say is best? I'm a little biased when it comes to this because you guys have to think I make most of my money and most of my income via real estate investing and real estate brokerage transactions and things like that. But I still say the answer is actually both. I'm a huge proponent for diversification. That doesn't mean, though, it's 50-50, 50% of the money I would say put into stocks, 50% I would put into real estate. I wouldn't do it like that. I personally put most of my money into real estate and then a small portion into stocks for diversification. I do have a Roth IRA that I do throw money into where I'm in the S&P 500 and things like that. But the majority of my money and the majority of the time I spend investing is in real estate. Now, if you're somebody like, there's a YouTuber out there named Ricky Gutierrez, he is the opposite, where he's mostly into stocks and puts a little bit of money into real estate deals and things like that. I think you have to go out there and find what you like, find what works for you better, what makes more sense in your mind, and kind of run more with that one, become a professional and a pro in that approach, and then do a small amount of diversification into the other one would be what I would suggest overall, and what I practice, what I preach with that. Thank you guys so much for watching my video. If you wouldn't mind subscribing and liking this video, that would be amazing, as well as going to my Instagram page and following that for more awesome content. Especially on Tuesdays, I do a Transformation Tuesdays where I take a before and after picture and I show you guys actual flips that I have done personally. So go check that out if that would interest you, and see you guys next time.